What if I told you the biggest weakness of the financial system wasn't greed, wasn't fear, but math? Long before hedge funds, long before algorithms, one quiet professor discovered a truth so dangerous that casinos tried to stop him, and Wall Street never saw him coming. This is not just a story about money. This is a story about thinking differently. This is the story of Ed Thorp. Ed Thorp was not flashy. He didn't grow up dreaming of money, fame, or power. He was obsessed with one thing: numbers. As a young man, Thorp was deeply interested in probability, the hidden rules behind chance, randomness, and uncertainty. While others saw luck, he saw patterns. While people accepted games as fair, he asked a dangerous question: what if they're not? In classrooms and quiet rooms, he studied how outcomes repeat, how small edges grow over time, and how human intuition often fails under pressure. To most people, probability was abstract. To Thorp, it was a weapon, if used correctly. But he didn't know yet that this thinking would soon take him to the brightest lights and the darkest corners of Las Vegas. In the 1950s and early 60s, casinos were considered unbeatable. The house always won. That was the rule. Millions of people accepted it. Ed Thorp didn't. He focused on one simple game: blackjack. Not because it was glamorous, but because it was logical. Blackjack had visible information. Cards were not replaced after every hand. That meant memory mattered. So Thorp did something radical. He stopped playing and started calculating. He simulated thousands of games, tracked card sequences, measured probability shifts after every draw. Slowly, something impossible appeared. The house edge could disappear, not by cheating, not by breaking rules, but by thinking better. When certain cards were left in the deck, the odds quietly shifted in favor of the player. Casinos didn't notice, but Ed Thorp did. Theory is one thing, reality is another. So Ed Thorp went to Las Vegas, not to gamble, but to test the system. At the tables, he didn't look nervous. He didn't celebrate wins. He didn't chase losses. He just counted, quietly, relentlessly. And it worked. Session after session, the math held. The impossible was real. Casinos began to notice something strange. This man wasn't lucky. He wasn't reckless. He was consistent. Security watched him. Dealers were changed. Tables were shuffled early. Eventually, casinos did what they always do when the rules stopped protecting them. They banned him. But by then, it was too late. The secret was already out. Ed Thorp didn't hide what he discovered. He published it. A book that explained, step by step, how blackjack could be beaten using mathematics. Casinos were furious. Players were shocked. The world realized something profound. Systems are not broken. They are misunderstood. But here's the most important part. Ed Thorp didn't celebrate victory. Instead, he asked a bigger question. If math can beat casinos, what else can it beat? Las Vegas was just a test. The real target was Wall Street. Las Vegas was supposed to be the end. Ed Thorp had proven his point. The system could be beaten. Not with luck, but with logic. But as he stepped away from the casinos, a deeper realization followed. Casinos were simple. The rules were visible. The odds were fixed. The mistakes were obvious. Wall Street was none of those things. Stocks, bonds, options, they moved on emotion, fear, and stories. Prices changed every second. Risk was everywhere, yet rarely understood. To most people, markets felt chaotic. To Ed Thorp, they felt familiar. Uncertainty, probability, human behavior. The same forces he had already learned to control. So he asked himself a dangerous question. If people misunderstand risk in casinos, what are they misunderstanding in markets? In the 1960s, Wall Street was not mathematical. It was intuitive, emotional, driven by rumors and reputation. Options trading existed, but almost no one truly understood how to price risk. Most investors treated options like bets. Ed Thorp treated them like equations. He began studying how prices should behave under different conditions: time, volatility, probability. While others guessed, he calculated. Slowly, he discovered something unsettling. Certain options were mispriced, not slightly, but significantly. That meant opportunity, not speculation. Opportunity, just like blackjack. Ed Thorp didn't rush in. He never did. He tested his ideas quietly. Small trades, carefully measured risk, no headlines, no attention. And once again, the math worked. Consistent gains, controlled losses, edges compounding over time, not because he predicted the future, but because he understood probability better than anyone else in the room. This was something new, not traditional investing, not gambling, something in between, something Wall Street didn't have a name for yet. In 1969, Ed Thorp took a bold step. He launched one of the earliest quantitative hedge funds. No sales pitch, no bold promises, just math, discipline, and risk control. While markets went through crashes, bubbles, and chaos, Thorp's approach stayed steady. Why? Because his goal was never to win big, it was to avoid losing badly. That philosophy changed everything. For the first time, risk was treated as something measurable, not emotional. Quietly, without noise, Ed Thorp laid the foundation for modern hedge funds. Many of the strategies used today, arbitrage, hedging, risk neutrality, trace back to his thinking. Wall Street didn't celebrate him, but it copied him. Here's what made Ed Thorp different. He didn't believe markets were predictable. He believed people were. Fear, overconfidence, panic. Those patterns repeated again and again. And just like in casinos, those who understood the rules of probability didn't need to be loud. They just needed to be patient. "You don't need to be right often," Thorp once said. "You just need to avoid being wrong in a big way." But his greatest lesson was still ahead. Because in the final chapter of his story, Ed Thorp would teach the world not how to make money, but how to survive financial chaos. Markets don't warn you before they break. They look calm right before panic begins. Over the decades, Wall Street faced crashes, shocks, and sudden collapses. Companies disappeared. Fortunes vanished overnight. But while many investors were destroyed, Ed Thorp survived, not by predicting crashes, but by preparing for them. He never believed markets were safe. He believed risk was permanent. So he built systems that assumed failure was possible, even likely. While others asked, "How much can I make?" Thorp always asked, "How much can I lose?" That single difference saved him again and again. Ed Thorp understood a rule most people learn too late. Big losses destroy compounding. You don't need to lose everything to fail. You just need one loss that's too large to recover from. So Thorp avoided leverage he couldn't control. He avoided stories that sounded too good. He avoided confidence without math. When markets were euphoric, he was cautious. When markets panicked, he stayed calm. Not because he was fearless, but because his risk was limited before the trade even began. This mindset made him almost invisible during crises. No headlines, no drama, just survival. Ed Thorp never became a media star. He didn't chase attention. He didn't sell motivation. Yet his influence is everywhere. Quantitative trading, risk-neutral strategies, hedging models, algorithmic finance. Many of today's largest hedge funds use ideas that trace back to his work. Some know it, Many don't. But Wall Street changed because one man proved that emotion was not an advantage. Discipline was. Near the end of his career, Ed Thorp stepped away quietly. No collapse, no scandal, no regret. Just a clean exit. His lesson was never about beating casinos or beating Wall Street. It was about understanding systems and your place inside them. Luck comes and goes. Trends rise and fall. Markets change. But probability remains. The most important thing, Thorpe believed, is not how much you make, but whether you can keep playing the game. Ed Thorp didn't win by being louder than everyone else. He won by being calmer. In a world obsessed with prediction, he chose preparation. In a system driven by emotion, he trusted math. And that's why he didn't just beat Las Vegas. He didn't just beat Wall Street. He outlasted them. This film explores real events and real people through documented history and public sources. If thoughtful stories like this matter to you, a like and a share help keep them alive.